to learn how to complete a balance sheet. Now I know you did a couple of practice ones yesterday, but I'm going to go over it using a video. Alright, so the first thing you're going to do is you're going to record the titles, the who, what, and when at the very top of the balance sheet. So the name of the company, the name of the financial statement, and then finally the date. Now, a balance sheet basically is a snapshot of what the company owns, what the company owes, and what the company is worth at a particular date. So you'll notice that for this one, it's the balance sheet for July 1st. So our assets are listed on the left-hand side of the balance sheet, and you'll notice that they total $247,000. Now the assets aren't just simply thrown onto the balance sheet. There's a particular order they go in. So at the beginning, they're listed according to what we call liquidity. Liquidity is how easily they can be converted into cash. So cash is already cash, so it goes first. Accounts receivable is money that is owed to the company by others. So in this case, $7,000 is owed to the company by others. And then finally supplies. Now supplies is liquid because if we ran into financial difficulty, we could go to another business and chances are they would buy our supplies. Okay? So they're relatively easy to change into cash. Now once we've listed all our assets or our assets based on liquidity, then we start listing them according to what we call useful life. And useful life is how long we're going to have them. So our bigger items like land, building, equipment, they get listed according to useful life. Now I always give the example that if there was a nuclear explosion, what would we have? We would have our land, simply because everything else would be destroyed. But we would still have land. It would be a big crater, but it would be our crater. So land goes first, followed by building. Building we would have the next longest, and then finally equipment, or truck or whatever. Now, in this case, our assets are equal to $247,000. Now, when you're recording your balance sheet, record all these in the correct order. But don't fill this in, and there's a reason why, and I'll get to it right now. This side will end up being longer than the left-hand side of the balance sheet. So you want to figure out where this ends, So it ends on this line. And then finally, when this is all entered, you can go back to this side and put your total assets so it's nice and square, and both numbers, or 247 and 247, end up being on the same line. Now, in regards to liabilities have to be recorded according to when they are paid, or when they have to be paid. So accounts payable, that's an account that's recording how much you owe other people. And usually we have to pay that off within 30 to 120 days. A bank loan is next. We normally have to pay that off anywhere between 1 and 5 years. And then mortgage, that's anywhere from 5 to 35 years. So then we come up with totals, a total for liabilities. Now the difference between this and this is our capital. That's the value of the business to the owner. So in this example, it's worth $94,000 to the owner. Now, our total liabilities plus our capital, or owner's equity, gives us total liabilities plus owner's equity. So these two should balance. That's the nice thing about accounting. You'll always know if you did it right, because everything will kind of balance out. Now you'll notice that there's no dollar signs beside every number. Only certain numbers have dollar signs. Usually it's the first number being added up or subtracted. So in this case 6,000, in this case 4,000, in this case, 153,000. Now, why does this have a dollar sign? The reason is because it's a subtotal. Now, subtotals also get dollar signs because this number becomes the first thing being added up again, because this plus this gives us this. Okay? So the subtotals need a dollar sign as well. And finally, the final totals need a dollar sign. Now, you'll notice there's a note down here which explains it all in text. Alright? So hopefully that helps you completing future balance sheets.